Hello, everybody. Welcome to Talk About House. I'm Todd.
I'm Juana.
Okay, bad news is Navy did not beat Army. It went down to the last play, and Navy tried to push it in the end zone. Its time expired, and they got about a half yard short. So
Right.
It was good. It was a close game, though. Army plays fifth-year seniors, which I think is totally unsat. That's a whole different video that we'll do. If you don't understand the significance of a service academy having a fifth-year senior, then okay. Anyway, we're going to talk again about real estate. Okay. Imagine that. We're going to talk about timing the real estate market because Juana and I were literally talking about this yesterday or today, right?
Right.
Yesterday.
And
then this article pops up and we're like, oh my God, Bank of America, an executive at Bank of America has been eavesdropping on our conversations or watches our video. Or both. This is the article. Mortgage rates are sinking, but don't try to time the housing market by waiting for them to fall further, B of A exec says. Mm-hmm. Okay? What is the fascination with day trading is the thing. People try to make these trades based on news, right? And 95% of all day traders don't make money over long haul. But what is the fascination with people trying to time the real estate market?
Well, I think it's twofold. One, people don't want to miss out on whatever it is that they're trying to not miss out on.
Okay.
And the other thing is people are concerned with not paying more than the guy next door.
Okay. I think it's people don't want to overpay. People don't want to feel like if they just had waited a year, prices would go down. So what they're willing to do is wait a year, watch prices go up, and then buy and go, well, at least I didn't buy it, and then they go down. And somehow, no, I think that's the thing. I think people are willing to bleed out slowly, but they don't want to, take a risk.
Right.
I think that's it. Okay, here's the first quote from the article. Mortgage rates have tumbled at the fastest pace since the 2008 housing crash, but prospective homebuyers shouldn't wait to see how low they go, a Bank of America executive said. Instead, if you're ready to buy now, you should do it.
I agree with that. And it's not that I think everybody should go out and buy a house right now. I think everybody should buy a house when their circumstances dictate that is the right time for them. However, if you're in a situation where you're waiting for the planets to align, that may never happen.
Right. This is the Freddie Mac chart. Now, this is the last year. As you can see here, about a month ago, the peak 30-year mortgage was right about 8%. It was almost at 8%. And you can see that the last day that it was published to the Freddie Mac site a couple days ago, it was 7.03% for a 30-year, fixed 6.29% for a 15-year. And you could see the substantial decline in mortgage rates. Now, remember, these are just the Freddie rates. The Freddie rates, are generally higher than what you would get FHA, VA, or a jumbo or something like that.
Right.
Why is that?
Right. So it just has to do with that these have a higher risk or, however that all works out. But so long as we're comparing the rates of the same rate provider over time, then we get to see a trend, and that's very helpful. Because I think that, we can all go out there and find a rate that is lower or that is higher. But if we're looking at the same thing over time, then it allows us to see the trend.
You can get a 30-year fix if you're spending over $1 million for a house at 6 3/8%.
Or better.
Or better. Yeah. You can get an adjustable. It's like a 5-year adjustable for less than that.
You can get a fix for less than that, depending on if you're a portfolio client and all kinds of other things.
Right.
Yes.
Okay, here's the next quote of the article. Timing the market is never good, Matt Vernon, the head of consumer lending, told Business Insider. It's really when you're financially ready, emotionally ready, and ultimately you find that home that fits your dreams and or your needs.
Right. And, look, the perfect home is wonderful, but we all know that life is full of give and take. And sometimes you have to, just figure out what's most important and make sure that that home meets those criteria, and the wants are nice, but so long as it meets your needs, then that might be the right home at the moment.
This is incredible stat that we just came across from the article, but they may already have started heeding Vernon's advice. Between April and October, the amount of consumers willing to wait for the market to improve fell from 85% to 62% of Bank of America report found. So this is what they did. They went and asked people, are you going to buy now or wait? And in April, 85% of people said they were going to wait for the market to improve, whether it be home prices going down, interest rates going down. In October, only 62%. That, if you flip this around, that meant 15% were going to buy, and now 38% are going to buy. So
Right.
more than twice the amount of people who were going to buy, it's doubled in the last 6 months.
Which is kind of speaks to what I've been saying for the last few months, that we're getting into at a place where people are done waiting. They're just getting on with their lives. You know, if the pandemic has taught us nothing else, is that we've already been robbed of a couple years of our lives, and we should not allow external circumstances to further rob us of what's important to us in our lives.
Here's a quote that I want to pick apart because I thought it was interesting. Meanwhile, home prices have been growing at a quicker pace than household income, which we know about,
Yeah.
making the market more unaffordable, with average earners committing a historic 41% of their pay on housing costs. Okay, first of all, Juana, this didn't say people who bought houses in the last year. This is average earners. So what they did is they just looked at what an average earner would make if they bought a house and figured out what percentage of their pay would be housing costs.
Right.
There are a lot of renters paying 41% of their pay for housing costs, right?
Yeah, there are some, certainly.
I just thought this was interesting. We still know a lot of people are paying cash. We still know a lot of people are putting money down. And everyone is not buying a house at the stretch of their, it's not like every single buyer is somehow stretching to afford. Only 2% of all mortgages that exist have over 7% interest rate on them.
Right.
The effective rate was like super low, 4.6 or something.
Yep.
Was super low. Okay. Still, the desire for homeownership has remained high, said Vernon. In fact, Bank of America survey found that 53% of respondents consider homeownership the leading definition of financial success.
That makes a lot of sense because, we all want to own the roof of our head, right? And we all want to be in a position where we feel safe in our home. So home ownership provides that to a lot of people.
I got a chart that goes with that that's pretty good. We're going to show that in a second here. Here's another quote. More housing market relief is expected next year. So, I'll comment when I finish the quote. When the Federal Reserve will likely start cutting interest rates, but some analysts have warned that further downside may be limited with mortgages ranging between 6 to 7% next year. But 6 to 7% is better than 8%. And we said in January of 2022, the interest rate thing would last 18 months. And we missed it by 2 months? Because I think it took 20 months for the whole thing to get all worked out.
About right.
So we were pretty damn close.
Pretty close.
Okay. I think that we've seen estimates where by 2025 rates could be in the high 4s again.
Right, we've seen that. And I don't dispute that at this point. I mean, it's possible. I just think 2024 is going to be high 5s, low 6s.
Right. Okay. Here's another good one. That said, a clear downtrend in rates should be enough to push some back into the market. Given they'll be more confident about refinancing in the future, Vernon told Business Insider. So people are saying, okay, look, rates are starting to fall. I think we're through the worst of it. The inflation has basically gone away. I can see this thing where rates are falling. They're talking to lenders. Lenders are saying, yeah, we expect in 2 years there'll be a lot less. So people are saying, okay, fine. They watched our videos. They know that home prices are likely to go up in 2 years. So rather than pay more in 2 years, they're willing to lock in the price now and then refi in 2 years.
There you go.
Do you think, what is the level of psychological, tactics?
I think that, like I said before, I think people are just done waiting. They're done having their lives on hold. And I think that the possibility of interest rates moderating over the next year or so is an added incentive for people to take a leap of faith and purchase a home.
Here is a chart. This chart shows the gap in net worth between homeowners and renters. The green line on the bottom is the average net worth of a renter. So it's the median net worth. Means half have more and half have less. So half of all people who rent, their net worth is less than 10 grand. And half of people who own homes, their net worth is about 400 grand. So it's almost 40 times. This is primarily, though, because of home equity, right?
Right.
And it doesn't mean that if you buy a house next year, you'll have $400,000 of equity.
No.
It takes time to build this.
It does.
And some of these are Gen Xers and boomers who bought 10, 20 years ago. If you bought a median house in Vegas for $135,000, that house today is probably worth $450,000. So you've got 300 grand there. You probably paid off a good part of the mortgage already, because if you bought it at the bottom of the market, that was about 14 years ago, maybe 2009, 2010. So you've substantially increased your net worth and your payment is probably much less than a rent payment would be. If you bought that $135,000 house, we saw people buying houses were paying like $700 a month in rent.
Right.
Remember that? And back then it was like, you were probably saying, well, why would you rent? Because the mortgage is cheaper. Why in 2009 and 10 were you seeing people show up to your rentals to rent that totally could have afforded to buy a house?
Maybe they had gone through a short sale or foreclosure.
Oh.
So their credit was destroyed by that, so they couldn't get a loan. It's not that they didn't have sufficient down payment or they didn't have the income. They just couldn't get a loan. And there really were not as many, as I like to call them, exotic lenders out there. And I'm not just talking about hard money lenders, but there are other lending opportunities out there. So, your only real possibilities were brick and mortar, Quicken Loans, and some of those were definitely around, but they had the same stringent requirements that a Bank of America would have had, or a Chase. So people were just kind of stuck. They had to rent because unless they were buying cash, they couldn't buy. There were people that had socked away enough money because they weren't making mortgage payments because it took so long to foreclose. And those people did come to market, and those people did buy homes cash.
Yeah. No, there were a lot of people that were buying homes cash.
Yep.
Matter of fact, part of the problem was back then you couldn't buy a house with a loan if it was too small, because the lenders wouldn't loan. If you were trying to buy $70,000, there were some pretty nice $70,000 houses that were out there. Matter of fact, we had one that was kind of in an older part of town, but it was a house that at one time had been worth $300,000 or $400,000. It was for sale. The bank was selling it for $70,000. It was my listing. We must have got 30 offers on it, and people were super excited that it was that cheap. And we told the bank it was worth more, but they ignored us and gave us the listing at $70,000. I would have just bought it if they'd let me, but they don't let us. They didn't let us do that. But the bottom line is, every year we started making these videos in 2008, and almost every year someone drops in the comments at least once a month or something with, "Oh, home prices are going to fall next year, at least 5 to 10%." Every single year they've been saying that, and there has not been a year yet where home prices have fallen 5 or 10% since 2009, since we started making our videos. And in 2000, the crash bros have been saying for 4 years that home prices are going to crash, and home prices have done nothing but go up. And then we got ridiculed last year when we said home prices would moderate, which is exactly what they did. They've actually gone up overall. In Vegas, they've gone up substantially, not only year over year, just this year alone. 6.1%, I think is the number. And because everyone else was peddling 40 to 50% price declines, it never happened.
Right.
So the bottom line is, I believe we're through all of the worst as far as the inflation, high interest rates, high borrowing costs. I think there'll be more homes come on the market next year, but not enough to satisfy the more people who come in the market. What are your thoughts?
I mean, I think we're going to have more transactions next year, if that's the question. Yes, I think that there will be more transactions next year, for all the reasons that I've said before, that people are just ready to get on with it. If you're a seller, you're just going to hold your breath and jump anyway because you need to sell your house to go buy another one. If you're a buyer, you're done waiting for interest rates to be zero, and you're just going to go out there and do the best that you can with what you have and hope to refinance before too long to a more favorable rate. I think everybody is just going to get on with it. But I don't think that we're going to have sufficient transactions to meet the demand. And the reason for that, and we've talked about this at length, is because there simply are not enough homes to meet the demand. Builders are not building enough, and Vegas is growing by a lot more than the number of homes that are being built. And Vegas is not alone in this. The nation as a whole, we're getting to a point where there are more household formations and simply not enough new homes being put on the market to satisfy the need.
The last thing I'm going to say, because somebody mentioned in the comments, but the boomers, they're going to die, and there's not enough people that can buy the houses when they die. There'll just be houses sitting everywhere with nobody to buy them.
Not so fast.
It's going to take, we did a whole video on this, it's going to take 20 years for half the boomers to die. 20 years. And they're not even the largest. I think because the word boomer, baby boom, people think it's this massive number of people. Mm-hmm. They're not the first or the second largest cohort of people in the US. Millennials and Gen X, there's more millennials and more Gen Xers, we're Gen Xers, than there are boomers. Mm-hmm. So this idea that there's all these homes, not only that, the US population is increasing. Mm-hmm. So even with them dying, we're still having more people be born and immigrating more people.
Right.
So yeah, there are no macro forces other than short-term interest rates, meaning interest rates have been high for the last couple of years. That's why home prices have gone up.
Well, and in all fairness, interest rates have not been high for the last couple of years. They have been higher than they were previously. They have not been high. They haven't even really reached the average interest rate over the last 50 years. So
no, they haven't.
So they haven't been high. They've just been higher than they were when the federal funds rate was zero.
Right. Yeah. All
right. Was it fun? Was it entertaining? Please leave us some comments that are real estate related, please. Don't forget to subscribe, hit the notification bell, share the video, and help us get to 10,000. If you are somebody
subscribers.
who enjoys, 10,000 subscribers. If you're somebody that watches the videos, please subscribe so we can get to 10,000 subscribers before New Year's. We appreciate you watching, and we'll see you on the next video. Bye.
Bye.